What is up, you guys? Pete DiCarlo here, and Happy New Year. Today, we're going to talk about trading stocks in 2021. I'm going to go over the email that I sent out to my entire team a couple of days ago, explaining and going over what I think you should be doing going into 2021, depending upon your skill level. And a lot of people are not going to agree because I have a very conservative mindset on how I think a lot of beginners should be trading, but I want to go over this with you guys. Originally, this was only for my private members, but I feel that this is so important for so many traders and so many investors even, that you do need to understand this and that this should be for everybody. So if you do want to be a part of my private stock market academy, you want to get access to all my trades live as soon as I take them, live stream with me every single morning for the first hour of the market open, and get access to our private Discord and all of our courses and lectures, we are running a special. You can get 90% off your first month. Use the code Academy90 and we'll put the link down below. So let's go through this email. Let's go over everything that I sent out to the team. And if you guys have any questions, please comment them down below. I would really like to answer them and help you guys out because 2021 is going to be an amazing year, and I'm so excited. So the email goes as follows. Happy New Year, guys. First of all, I want to thank everybody for the support in the past year. As you may know, we have been testing and formulating a new strategy in the Academy that we have had massive success with. If you guys want to know what that strategy is, like I said, join below. It's only $10, no commitment, nothing like that. I've decided to create a trading game plan for this year that is based around your skill level, portfolio size, and risk tolerance. Please remember that this is based more on your skill and not the amount of money you guys have. So for instance, I do have a lot of beginners who might have 40, 50, 60, 70, 80, even sometimes $100,000 who haven't been trading that long. They just might have more money. They might be older in life. They might be using their retirement. And I do have some people who I would be considered skilled, almost professional traders with only $5,000 to $10,000 to their name. So the size of your account really has nothing to do with the actual blueprint that we're setting up. It's more based off of your experience. Now, starting with the first one, beginner. This is somebody who has been trading for less than 1 year. Your goal for 2021, probably not going to like it, is to not blow up your account. Your goal is going to be to learn as much as you can from the market and from other teachers that you can without losing every single thing that you have. Think of your first year and first couple years really in the market as an internship somewhere. You're not really going to get paid. You're not planning to get paid. You're just trying to learn and gain as much experience as you possibly can. These students, I think, should only be trading shares. Once you can become profitable with shares this year, then we can look into doing some safe option spreads, which we're going to talk about later on. Now, as far as shares, the reason that I say this is because the room for error is a lot higher. If you purchase a stock and you purchase shares and the stock doesn't go exactly the way that you want, you're not going to have to deal with theta decay. You're not going to have to deal with timing. And it's just a lot easier to sell and buy because there's always volume with shares. So I say you should always trade shares. I started this way and I structured my trading portfolio in this exact manner. For me, it was a max of 4 positions at a time. I say this because I think that when you're starting out, especially if you have a job, because for a lot of people, if you're starting now, this is not your full-time gig unless you're a student, you can really only pay attention to 4 tickers at a time to keep up with the news, keep up with the price action, and just not have yourself spread too thin everywhere else. Position sizing. I personally would say a max of 25% of your portfolio per position. So for those who have followed me for a while now, you know that I never go all in on a position to start. So let's say that I want to get in on Apple with some shares and the max position size I want to have is $2,500. What I will do is start with half of that position. So let's say like 1,250. And then as it goes down to maybe a support or down to a point where I'm thinking about cutting a loss, I'll start to add the rest of that position size into the position. And then if it bounces, that's great. If it, breaks below my support, then that's whatever, I'll cut the position. The most important thing you should be looking for as a beginner is risk management. Risk management is key when you are starting because your goal is not to lose everything. Even if it all goes wrong, which it probably will, you must make risk management the most important thing. You can set a stop loss on the percentage of the trade that you're willing to lose, so 3 to 5%. You can decide to set it up as a max dollar loss, so say you're just willing to not lose more than $100 per trade, or you can set it up as a max portfolio loss. So for me, when I started, I would do a 2 to 3% max portfolio loss. So say I started with $2,000, my max loss per trade was $40 to about $60, and my max profit would hopefully be about $60 to $120, which we'll talk about later. So if you're a beginner, that is your goal for 2021. Now, the next kind of trader and section that we're going to talk about is a part-time / intermediate trader. This is somebody who's been doing this for 1 to 2 years. These are students who have been able to trade for more than a year, who have good fundamentals, but want to achieve consistent returns to supplement some of their income or maybe grow their net worth. So if you've been trading shares for a bit, you're doing really well, but you still have some holes in your game, but you have a good understanding of the market and you want to really fine tune the skills that you have. Because learning how to trade is not hard. It's taking a couple things that you're doing wrong, especially psychologically, which we'll talk later. That's the most important thing. So your goal, if you're one of these people, should be just to make consistent gains month after month. And you should not look at a daily or a weekly P&L, but a monthly or a quarterly P&L. At this point, I don't care how much you're making. I don't care if you're making 100% a month or if you're making 2% a month. As long as your profit and loss looks like this, now let me show you. As long as your profits and losses every single month, when you look at your little Robinhood or whatever it is, look like that. A slow grind up. If your profits look something like this, where you get big spurts up, big falls down, big spurts up, I don't want it to look like that. I'd rather you make a consistent 20, 30 bucks a month rather than be up 600 one month, down 600 the next month. We're looking for consistency. That's the most important thing, because at the end of the day, trading is a long-term skill and a long-term investment in yourself. And we want consistency, even though it's very hard to do that in the market. So don't look at your daily or your weekly profit and loss. Look at your monthly profit and loss and your quarterly profit and loss. Now, at this stage in your career is where you truly hone in your basics, and I took this time to trade shares and even start to learn options. At this point, I don't think anybody should be trading straight options. I think that you could start with like call debit spreads and put debit spreads. If you don't know how to do that, check out my YouTube channel. I do have videos on that. Just type in Pete DiCarlo call debit spread. Basically, it allows you to have minimum risk while locking in the max amount of profits that you can make. So this way you can't destroy your account in a couple of bad trades. Now, I do not advise to trade credit spreads at this point, simply because credit spreads are extremely safe. On most of the credit spreads that I play, I have about a 90% chance of making money. But there are those off times, like back in February when Rona happened, that you could wake up and you might have your entire portfolio in collateral, which could be $10,000, and you might have a 99% chance of making money, but the stock market could crash like we did before and you lose everything that you've put your money into. So at this point, I don't think credit spreads are the best for you to be doing at the time. Use this time to really learn patience and what it really means to build your skill as a trader. And I cannot push this enough. 95% of traders fail. And it's during this time. It's during this first 1 to 2 years. And it's easy to make money for a couple of months when the market's doing well. However, people fail at this stage because they're either losing money or barely breaking even. And they're like, I'm just not doing this. This isn't what I thought. This isn't me making money all the time, posting it on Facebook. I don't really want to do this. These are the years that make a trader decide if they're going to succeed or shake out the weak people who are here for fast money. So that's what you should be focusing on 2021. If you've been trading for the past 1 to 2 years and you got your basics down and you're doing really well. Now we're going to get into the fun stuff. This is going to be your advanced traders. This is 3 to 5 years of trading. This is where I was about 1 or 2 years ago, and I'm finally moving myself into the final one, which we're going to talk about after this. This is for somebody who's been in the market for 3 to 5 years. Congratulations, because you have probably either become a profitable trader, learned your fundamentals, and made you a great skill that you will have for the rest of your life. You might just have a couple of problems psychologically that we're going to talk about that are hindering you from really taking this skill to where you want it. Or you're somebody who is resilient and you're still just losing money, but you're here because you're passionate. And honestly, even if you're somebody who's been trading for 3 years and you're still losing money, but you're passionate, you still have a chance to be profitable and to become part of the 5% that do this full time, living off the markets and are consistently profitable. Now, one of the biggest things that led to my success was the ability that I just never gave up. Like, I remember losing tons and tons of money. I remember just breaking even 4 or 5 years after I started trading. And I just remember being like, dude, what are you doing? Like, should you give up? Is this really for you? And I just was like, dude, I know 95% of people fail, but there is that 5% of people who do not fail, who actually do this for a living, who I know are legitimate too, and not just like YouTube scammers. And so I was like, I'm just gonna stick with this. Like, I know I'll get there someday. And so if this is you and you're one of those people, you have to take a step backward and you have to learn your fundamentals. And the biggest problem with these people is that they're always looking for the next breakthrough. I always wanted the newest strategy, the newest indicator. I thought if I just bought somebody's program or followed somebody's plays, that everything would be fine and that I would be great. And the truth is, I was not missing an external piece of the trading solution. I was missing an internal piece of the trading solution. I was missing something that was wrong with me, and this was my psychology. And psychology is what takes a trader who can make 20-30% a year and makes a trader who can make hundreds, if not potentially thousands of percent a year, because this is a psychological game. So psychology, learn your own behaviors and self-sabotage, and it is key to making a profession out of this. The truth is that trading is easy. It really is. I could hand somebody who's never done it before a phone, tell them to just go pick some random ticker on Robinhood. They could buy it and they could just hold it for the next day, wake up tomorrow and make money. It's that simple. And even learning fundamentals of technical analysis and trading is extremely easy as well. Learning how to use an EMA, SMA, volume, and that's really about it. Like, that's all you need to trade consistently and do really well, is the psychology behind doing that. So you need to become a profitable trader, and you really need to focus on your psychology, and you really just need to focus on price action, volume, and your moving averages. And the key, however, is to use a proper stop loss. So many traders fail because this is the only time in life when you're in charge. We go to school, we're told you do X, you get these grades. You go to work, they say you work X amount of hours, we will pay you X amount of money. If you don't do what you're told, then you don't get paid for it. In the market, it's the exact opposite. You get to wake up every day and be like, all right, what am I doing? Like, do I want to trade? Do I not want to trade? What kind of position do I want to take? How much do I want to leverage myself in the market today? Like, it's all up to you, and a lot of people fail. That's a big problem. There's no one to hold your hand here and tell you what to do. Many people fail because they are undisciplined and their psychology gets the best of them. If you are somebody who says things like this, if I could just make blank amount of money, I'll be fine. If I can just get out of this trade, I swear I will never do this again. If this stock goes up, or I need the stock to go up blank in order to blank. If you're saying those things, you have a psychological issue, not like it's not that type of psychological issue, but the problem you're having with trading is you have a psychological block that you need to get through, and it's really probably not your technicals, especially if you've been here for about 3 or 4 years. Most people who have been doing this that long, they understand the markets enough. Now, all of these show a lack of discipline. You may be a good trader, but if you lack discipline, you'll never become a professional. Now, your plan is to continue to trade as we spoke about earlier, using proper risk management and position sizing, but you need to log. With a little log, you can use a post-it note, you can use Excel, which I do, but I really want you to log the trades, and most of all, not only log the physical trade, but log how you felt that day. Log, did I wake up late? Did I run into my office and I feel like crap and I'm dehydrated and I haven't had coffee, and or did you wake up, you had a great morning, you walked the dog, you got your coffee, you stretched a little bit and you're feeling amazing? Did you just get in a fight with your wife? Did you just get in a fight with your friend or something? Like, all of those things have to do with your psychology. And that's very important. So log how you felt. The key that I found with these traders is position sizing. If you're having trouble trading, go all the way back. So if you're trading with like $10,000, go back, start trading with $1,000 worth of shares and $250 worth of options contracts. Most people have no problem doing this, especially if you've been around for 3 or 4 years, because it's such a small amount of money that's not a big deal. If you have $1,000 and you lose 10% of that, the most you're losing is $100. If you have an option that's $250 and 50% of that dies, you're only losing $125. So what happens is when you go backwards, you realize that, okay, I don't get psychologically invested in this money. Once you get confident, start to move that up into small increments. So start with 1,000, move to 2,000, move to 3,000, move to 4,000, move to 5,000, 6,000, 7,000, 8,000, 9,000, 10,000. Get to a point where you no longer really feel comfortable. And then from there, start to scale yourself back. So something that I realized is I was really comfortable trading $5,000 worth of shares. I was really comfortable trading $10,000 worth of shares. Once I went up to $25,000 worth of shares a couple of years ago, I was like, all right, I got to back up, because every single move that goes against me or with me, I'm overreacting way too much. So that's extremely important. And I'll do an entire video on that in the future, because I just did a lecture with my team this morning talking about emotions and overreaction. So we'll talk about that today, especially since the market opened down 1.5% and now the S&P 500 is up 1.5%. A lot of people probably overreacted today. The other thing too is, at this point, I'm sure that you've probably started trading traditional options. And the best advice I can give you is to give yourself more time than you need. When trading options go a minimum of 2 months out, this allows you to protect your downside from theta. Yes, you will not make as much money, but if you go a couple of weeks out, you'll have much less to worry about, which ultimately is going to make you a better trader. Now, we're already 16 minutes in. It's one of my longer videos, but this is probably one of the most important videos I'm going to make for a while. So I need a little water. Now, we're going to go to the highest that you could possibly be. And this is a professional trader / portfolio manager. Because at this point, trading is not the only thing that you're going to be doing. Trading is not going to make you millions of dollars every single year. What is going to make you a millionaire is portfolio management. And we're going to talk about that. So in order to be a professional, you need 5 years, in my opinion, of consistent profits. And I am almost there. I'm at about 4 years of consistent profits at this point, maybe about 3 years of consistent profits, because I took a pretty big hit 3 years ago. But I'm starting to move into the portfolio management side of things, because I am starting to make so much money that I can't just keep trading all that money. I need to start putting it towards long-term investments and towards a lot of other things. So if you are here, and if you're not here, don't just turn this off. This is extremely important, because if you don't have a clear goal and a clear, idea of where you're going, then you're never going to get there. So, professional traders, congratulations. You are part of the 1% in the financial markets. And to be honest, if you're a professional trader, you're probably not watching me right now. But if you are, congratulations. You're part of the 1%. To be honest, it's not as hard to get here as people believe. I am almost here. And you guys got to realize, I got thrown out of 2 high schools. I dropped out of college 3 times. I'm a convicted felon for 14 grams of Mary Jane. And I'm not smart. Like I'm terrible at spelling. My academy will tell you that. I'm really bad at math. But if I can do it, every single one of you watching this should be able to do that. And however, it's not like the other brackets. This has a lot more to do with your net worth, portfolio management, and most of all, conservation of your capital, holding on to the money that you have made. If you've gotten yourself here, then you should have a nice size portfolio. And I do want you to realize that in order to be here, you do not need to have 100 grand in the markets. You could have started with 1,000 and now you have 25,000 5 years from now. And that is one hell of a return. However, at this level is much more about being a manager of your portfolio and net worth, much more than it is about just straight trading. While capital appreciation is always on your mind, capital conservation is your top priority. At this point, you should have multiple brokerages. 1, you should have a Roth IRA. You should be maxing this out each and every year, and I recommend making a small-time investment account. Potentially make this like a growth investment account. I'm going to do an entire video on Roth IRAs too in the future, so make sure you hit the subscribe button. They are extremely important, and everyone should have one. The second thing is you need to have a retirement account. This is an account that you look at yourself as an active long-term investor, actively spending a couple of hours per week finding companies that are fundamentally undervalued and building positions around them on a much longer time frame. This is where true wealth is built. As well, you will need to learn how to place hedges against your portfolio for maximum security, which we'll talk about in our courses if you're not a part of the course. in the academy. Like I said, the link's below. But back in March, a lot of professional traders held all the positions that they originally had, but were placing SPY puts and hedges in. So therefore, while the market was dying, their portfolios were just sitting still. And that's how a professional does that. And we'll talk about that later on in my academy, and as well, I can make some videos here. Now, you're also going to have a trading account, and your trading account is going to be the engine for your retirement. So if you've made it here, you're probably full-time in the markets. You probably don't have a part-time job. You might, but you probably don't have a full-time job. This is your job. If not, it's fine. You'll be very busy between both of them, but this requires a lot of time. At this point, trading will be your main engine to drive this train. So for instance, every time my personal portfolios hit $50,000, I take 20 grand out, I reset it to 30, and I put that 20 grand towards a long-term investment, or I buy a piece of real estate, but I put it towards something that's diversified away from my trading and towards a longer-term outlook for my retirement. You don't really ever need more than $30,000 in your trading account if you're trading options. If you're trading shares, you can go up to like $200,000, $300,000, $400,000 worth. But if you're trading options primarily, you don't need more than 30 grand. Now, do I really need all of these accounts? Yes, you do. And the reason for all these accounts is to differentiate your goals, because remember, psychology is key in this industry. You don't want everything in one place, because when things get fuzzy, like I said before, your goals start to fall apart and deteriorate. You want to keep them all separate. So I said, I hope that this list and protocol has helped you. This is a long-term journey, a skill that you'll have for the next 50 years if you choose to put in the work. If you are in the markets, and this is for everybody, if you are in the markets for quick cash, you will be slaughtered by those who have the will that we have outlined earlier today. I hope 2021 brings you the best, and I wish that you could work hard for everything that you want. Please let me know if you have any questions, and thank you so much. Pete DiCarlo, CEO of Capitalist Academy Corporation. So, overall, I hope that this helped you. If you guys are still here, this is a pretty long video, especially for me. If you guys are still here, you have the ability to do this. Like, you have the ability to become a professional trader. You are probably very passionate about this. And if you sat through a 20-minute long video of me reading an email, you guys are serious. And I wish you all the best. So subscribe to this channel, subscribe to my second channel where I go over technical analysis every day, and check out our academy. I don't just promote it because it is my academy. I promote it because I literally have built the best trading product out there that I truly believe in. It's only $10 for the first month. I do that because it's normally $100 a month after that, but I do that for the first month so that I can make sure that you guys know there's a lot of scammers out there on the internet. There are a lot of phonies and fake gurus, and I want you guys to know that we are legitimate. Thank you guys for watching. Hit the like button, subscribe to this channel. Thank you for all the support in 2020. 2021, we are going to kill it. Peace, team.